Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is a review of recent big winning trades in the newsletter and some losing trades. And the goal is to learn from some of these big winners and also the losing trades for the future. So, we're going to start out with some sector trades from issue 74. And these were in the semiconductor sector, buying the sector ETFs SMH and SOXL after the April correction. Now, the reason in the newsletter it was discussed to get back into this sector and really to get back into the market was the number of stage 2 breakouts that started firing off right after the April correction was over. There was a surge in stage 2 breakout activity. And as you can see, the semiconductor sector held up extremely well during the correction. You can see how the price action is actually very tight here, and it got back to the former highs very quickly. And there was multiple breakouts in this sector as well. Nvidia and VRT were two stocks that were breaking out around this time frame right after the correction was over. So it turns out semiconductors were the leading sector coming out of the April 2024 bottom. There was another big run where big gains were achieved, and this topped out around the July timeframe before we had the recent meltdown. And interestingly, a lot of other sectors did not join semiconductors during this time frame. They really led the market higher. They were kind of in a vacuum. There were some other trades that were working. Financials were working pretty well during this time period, but the artificial intelligence space and a lot of other sectors really struggled while semiconductors were leading the market. And semiconductors had been the previous leader coming out of the October 2023 bottom. So overall, this was a pretty logical trade to put on because of the stage 2 breakout activity after the correction, and the leading stocks that were breaking out were semiconductor stocks, so it made the semiconductor sector a logical choice. And these sector ETFs really worked well because the semiconductor sector has been very tricky because really Nvidia has been leading everything, and there hasn't been a lot of new IPOs or other big winning stocks to trade. So really trading these sector ETFs has been a great way to go for semiconductor stocks. SOXL was a similar trade, obviously the leverage version of the semiconductor ETFs. This one went on to have huge gains coming out of this April 2024 correction. This ETF tends to correct more during corrections, but it also goes up more during uptrends, and this went up over 100% off the bottom to the top in July, and then crashed during the meltdown that was just happened in the semiconductor sector. A stage 2 breakout pullback that worked really well was ROOT. Actually, the original breakout was also highlighted in this newsletter. It was a monster stage 2 breakout on massive volume. This turned into just an epic runner over about a month actually. The stock 7 or 8 bag, just incredible gains, and then obviously extremely extended after this run. So waiting for a pullback was a logical way to enter this stock. And then, as I've discussed in some of the educational documentation, I think in the moving averages for trading, there's a discussion of using that 30-week moving average as a logical the first retest of this in a major big winning stock tends to be a place where support is held, kind of increases your odds of success buying a previous winner at that first pullback here. So that's what this trade setup was. And you can get a tight entry at a setup like this because you're buying right above the moving average. If it does close below it, you take a stop, and if it continues higher, then you're in a trade that has pretty good potential. The financials obviously were a leading sector, which is what helped power this stock higher again, and this went on to have almost a triple digit gain in a short period of time, and then it corrected lower during the July correction. So another big trade here, buying this pullback, and it sets up nice risk reward with using the moving average as a stop. Turning to some of the short trades, UVXY worked extremely well leading into the July correction. As I've discussed in the newsletter, using the timing model, there was a lot of indications that the market was going to go into a correction, and big volume started coming into UVXY on the breakout here, and then a pullback to the 20-day moving average was targeted as a logical place to enter. Is around where it pulled back to. Then it kind of went on to consolidate a little bit further, kind of made some gains, but still consolidated sideways. And then really the big gains were made during the 3-day panic leading into the August 5th bottom, where volume just went explosive in this ETF. Fear just came into the market, like a tidal wave, and this thing went up over 100% in a short period of time. So really big trade here, and again, it had another nice tight entry, buying a pullback off the initial breakout to the 20-day moving average. And then playing SOXS was another way to play a correction in semiconductors. And obviously being the leading sector, this sector is a nice target for shorting because these leading sectors tend to fall pretty hard after they top, and that's really what semiconductors did. Again, there was a breakout here on an increase in volume, and then it pulled back nicely to the 20-day moving average. So that's where, a good place to set up risk reward. Plus you had this gap right here. You could use that as a stop if you're entering around the initial breakout. And then it basically ran for a couple weeks. Didn't quite go up as much as UVXY, but it was a nice trade off the initial breakout. And then obviously the volume surged here, but then there was a top, and then this corrected significantly when semiconductors bounced. So nice trades to the short side as the correction started. I think a lot of people were caught by surprise by the July correction, but the stage analysis process, the timing model worked pretty well, identifying that correction. And then when semiconductors were extremely stretched following the massive correction and really panic bottom that occurred in August 5th, on the focus watch list, there was a trade playing mean reversion in semiconductors, and that's exactly where they've kind of bounced to now as these key moving averages. So basically the trade was to buy this massive meltdown and then sell when it got back up to the key moving averages. And that's really what happened here with SOXL. And the big volume here is really where you see the massive change in ownership potentially of the stock, and really the exhaustive selling. Once you get massive volume like this, it typically washes out selling pressure, and then this thing rose again because the selling pressure was dissipated after just a complete crash. So sellers got wiped out, and then buyers pushed the market back up higher in some mean reversion. So nice mean reversion trade. NVDL worked extremely well too. This one had washout volume again, just like SOXL, and a nice bounce. Bounced even further than I kind of anticipated, above the 10-week moving average. So pretty good trade here. Obviously getting back into some resistance now in the semiconductors, but nice trade off the mean reversion bottom. And then finally looking at a couple trades that didn't work well. As I mentioned, the April 2024 bottom, there were some sectors that tried to emerge and break out, and they just never followed through. Solar was one of them. Solar was a logical extension of the semiconductor bull market potentially, and had a huge volume breakout uh, that was part of issue 78, and a sector trade was put on in solar. But basically, what happened is after the initial breakout, there was a pullback to the 20-day moving average, and then another move higher, but then it just crashed back down. And then solar's really been, doing basically nothing since then, actually trading below the 10-week moving average and acting pretty weak. So basically, what happened here is you had a breakout, a retest, and then a failure right here. So what you would want to do is take a stop. So let's say you were patient and you bought the first pullback to the 20-day moving average. You would stop out on the breakdown below the moving average, the 20-day, or you could use the 50-day as a logical place to stop out, and then basically be out of this trade after that. So again, it's all about using risk reward to your advantage, and basically having tight risk with potential for big reward. So you're trying to buy a stage 2 breakout here, but it just doesn't work out. So you take a stop and move on to something else, or just stay in cash and wait for a better opportunity. So solar didn't pan out here. I think the explosive volume was really what was a good setup here, and then you had a couple different stocks that were acting pretty well, but it just didn't follow through, and that's what happens in the stock market sometimes. Not all trades work out. And then the other trade highlighting that failed was buying a pullback to the 30-week moving average in XLE. This was another sector that basically was a big winner coming out of that January time period. And then it had a major correction back down to the 30-week moving average. So kind of a logical place, that first retest of the 30-week as a place to buy. This one started moving back up, but then ultimately failed, broke below the 30-week moving average. So you'd want to take a stop there. It did whipsaw, move back above it for a little bit of time, but then crashed back down to the 30-week and has had a couple more whipsaws since then. So it's really been trading erratically. There hasn't been really any leading stocks that have broken out in oil and gas, and with crude oil acting weak, now the sector's actually acting even weaker, or about the weakest it's been recently now. But again, this trade just didn't pan out. You're buying a pullback to the 30-week, and it started to move higher, but just went back down, and that's where you take a stop. And again, not all trades work out, and this whole time period from April to July, there were a couple different sectors like this that were trying to break out and just didn't do it. So that's what happened with the stock market. Semiconductors really led, and there was a couple other sectors like financials that did well as well. But overall, some pretty good trades in the newsletter over the last couple months, even though the market's been pretty poor. And going forward, I think the process is working pretty well, targeting both long and short opportunities, and using ETFs in particular is working well, because there continues to be a lack of IPOs in this market, and I think trading these sector ETFs is a good alternative when you want to get sector exposure and you're not seeing a lot of new high quality leading stocks. I think playing these ETFs is a great way to diversify, take away individual stock risk, but yet participate in the right sectors.